morning. You're watching the MEM Edge show. This is Mary Ellen McGonagle, and this is the show where we put you in front of where the action is in the broader markets. And another tough day here, as we are seeing on the open, the broader markets are on the downtrend here. So let's go ahead and get started. I'll review with you what we are going to be covering today. As usual, we're going to take a look at the current markets, where we are. Of course, you do want to have a good sense of not only where we are, but where we may be heading so that you can formulate your plan for the week going forward. And then from there, we're going to take a look at the recent strength in gold and some of the ways that you can capitalize on that strength. And then also, despite the weak market, there are other areas outside of gold that are really withstanding the downward pressure and are doing they're doing okay. We'll go ahead and take a look there so you can have some ways to potentially counterbalance this market as far as the volatility and the current negative action that's taking place. There also we are finishing up here. Last week was another strong week for earnings season for Q2, and there are still some pretty important names that are going to be reporting this week. So we'll go ahead and take a look at some of those names just to have you get a sense of some of the bigger, better known names in some of these industry groups that are really quite relevant. And we're going to take a look at some of those stocks. So let's go ahead and get started. As mentioned, we are going to want to see where the markets are currently. So let's go ahead over to StockCharts.com, of course. And what I'm sharing with you right now is a daily view of the S&P 500. I've marked it up a bit today so that we can get more insight into historical precedent relative to where we are now. So as this daily chart, each one of these bars, of course, is one day of trading activity. And I've gone ahead and overlaid simple moving averages on top of this price action. And this is going to be really quite helpful. Hopefully you can see this green line that more closely hugs the recent price action here. That's your 10-day simple moving average. There is a blue line on here. That's your 21-day simple moving average. And then the longer term red line here is your 50-day simple moving average. For those of you not familiar, quite simply, these are smoothed out lines that represent the last, in this green line, the last 10 days, 21 and 50-day the price action. It's taking an average and then giving you a smoothed out version of that. Now, the relevance here is you want to pay attention to the price action of the S&P as it performs around these simple moving averages. And I've highlighted other prior periods, again, for historical precedent. But as this price index potentially breaks down below these shorter term simple moving average, it's not the end of the world. It's more of a red flag that is telling you that we've broken this current uptrend. What I'm doing here is taking us back to the beginning of August when the markets did begin to break below these simple moving averages. As we break this 50-day, this red line, things get a little more ominous, if you will. A break below your 50-day is very commonly viewed as near-term negative. So we can see that we broke down below that 50-day. Last week, we got a brief respite on Thursday. The rally did break back above that 50, but now we are back below that. So that is certainly not positive. It's again, not the end of the world, but it is a break. It's not something that you want to see. From my work, I tend to either move, not entirely to cash, I'm just not putting money to work. So that is one of your near-term, certainly shorter term moving averages, as well as that longer term 50. Let's go ahead and take a look at some of the other indicators that you can overlay on your chart that I've found quite useful. Up here on the top, we have what's called an RSI. That is your relative strength indicator. You want to pay attention to not only the slope, is it trending upward or downward, but the actual location of the RSI relative to this 50, this net neutral. And we can see that currently the RSI is trending negatively and is below this 50. So that is another negative, near-term negative signal because we are looking at a daily price chart. And then down here I have stochastics, another momentum indicator. This 50 again is going to be relevant. You want the stochastics. We're taking you back to this June period where the markets were healthier, heading upward and above this 50, but now currently we are below that 50, so we can see the stochastics are negative as well. So not a particularly healthy period currently in the broader markets. What I've done is also highlighted prior periods when we've had what is called a death cross. For those of you that read the articles on StockCharts.com, I did write about this last Monday. And that is the phenom where you have these shorter term simple moving averages crossing down below the longer term. That is called a death cross. I know that sounds absolutely horrible, but really what it is telling you is that the near term momentum in the markets has shifted. Now, most people will look at the 10-day crossing below the 50, but in my piece last week, I was taking a look at the shorter term, this green 10-day simple moving average crossing below the blue 21-day simple moving average as a signal that the near-term uptrend has ended. What I've done here is pointed out over the last 10 months, this only has occurred 2 other times, this shorter term 10-day crossing down through the longer term 21. And those 2 prior occurrences were foretelling as far as taking us back to October of 2018 when it was the beginning of this bear market. The other time it occurred was during this May correction. The S&P 500 did pull back 10%. That qualifies it as a correction. So it was, in fact, very much worth paying attention to. That shorter term did cross through the 10-day down through the 21-day. Now what is occurring given today's action is that 10-day crossing down below the 50-day. So again, this is your second negative death cross, if you will. And then we can go back here to this May period when that 10-day did cross below that 50-day, similar to today. And we did get, subsequent to that, another 2 weeks of downside. Of course, back here in October, it was certainly a bit more ominous. I would argue that we are more in a less, certainly not poised for a bear market at this period. I'm viewing this as more of a potential pullback than anything else. But that is where we are in the current markets. So please bear that in mind. For those of you that are subscribers to my MEM Edge report, it is a bi-weekly report where I describe in fuller detail not only the broader market, but drilling down into each of those individual sectors. But each, for instance, last week, 4 alerts went out very regularly as far as advising clients on the markets. So I urge you to go to meminvestmentresearch.com and you can trial that MEM Edge report. And I will, with that, provide you with updated alerts to not only the broader market, but individual stocks that are suggested on that report. So let's go ahead now and get back to the markets. What I've done here, this is, again, of course, StockCharts.com, the candle glance. You can populate this with any of the indices that you desire, and also broader market ETFs, which I have gone ahead and done so. I have each of the indexes as well as select ETFs for sectors. What I'm going to do now is go ahead and overlay the RSI, that relative strength indicator, and I'm going to sort this by descending. I want to see in this current market environment where the strength is. So if we look up here, this is going to be sorted strength to weakness, and we can see gold stocks very prominently up here in the upper left side. Over this last 2-week period, gold has been a real safe haven investment. And then from here on the lower right, as far as weakness, we can see I have the yield for the 10-year treasury, and it is down another 3% today. So right now that 10-year yield is about 1.7%. We'll go ahead and take a look at a bigger picture in a minute because you want to see where the yields are relative to historical precedent. But let's move on back to where the strength is in the markets. And we can see XLRE, this is your real estate index, real estate ETF, REIT stocks, XLU, utilities, healthcare. So we can see up here in the forefront are generally defensive stocks. XLP would be up here as well, the consumer staples. Volatility also picking up again today. We can see it's up here anytime it does get up above 18. It is now at 19. That is also a bit of a negative sign as far as the current market action. So that's where we are currently. We can see with the yields dropping that financial stocks are in trouble, if you will. They're down again today. But let's go ahead. I want to take us to a couple of areas. I talked about being able to play certainly some of the relative strength that is occurring in the markets. And I'm going to take us here from this current sector. This is a view of today. Certainly financials, I talked about them being in this negative area. Consumer discretionary stocks getting hit again. This is an area that is due in September with this next round of tariffs. They are very squarely aimed at discretionary. So that's an area that is getting hit. But let's go ahead to the materials sector fund that is relatively outperforming the broader markets. And I talked about looking at some of these gold stocks. So again, you can see how I was able to get to this by going from that sector, basic materials, into gold miners. What we are going to want to do from here is sort it by this SCTR. This is your StockCharts technical rating. We want to see stocks that are technically very sound, are holding up quite well. Now, for my work, I do prefer to work or certainly get involved with larger cap names, but many of these gold miner stocks just by nature are going to be smaller or mid cap. So let's go ahead and take a look at RGLD. Some of these certainly are going to be a bit extended given the rally in these stocks over the last 2 weeks. Now we can see that gold did have a very positive period here, June into July, before having this. We're looking at a daily price chart of Royal Gold, RGLD, and we can see that this is quite extended. But what I wanted to share with you, and then also this RSI up here at the top, once it gets up here above that 70, quite simply it's telling you that the stock is overbought, but you can see it can remain overbought for quite some time. It's just with an eye that at some point we could see, similar to this period here, a pause, but we can see that your MACD is positive up here above this net neutral zero. And then last week we had that black line up through the red, which is a bullish signal. But what I did want to point out to you when you're looking at some of these stocks that could potentially be a bit extended, it can really be helpful to drill down even further. This is for those of you that are more active in your trading activity. I'm now looking at an intraday. This is a 60-minute, so that each bar is 1 hour of price activity. And these intraday charts can be really quite telling as far as getting you in. This is taking us back to August, the very, very beginning. Subsequent to this downtrend that we had at the end of July, you would use these intraday charts very similarly to daily price charts. I have a 5 and a 13 on the simple moving averages, so 5 hours and 13 hours, and taking us back to this beginning of August when the MACD turned positive in line with the RSI turning positive, and then the price moving above these simple moving averages. So that is how you can certainly use the intraday. You would also use it to potentially move out. This is that basing period during the end of July. The RSI waffled around here, didn't quite turn negative, but I'm going to go ahead and take a little bit break here. When we get back, we are going to review a couple other gold stocks as well as other areas of the market that are holding in quite well. So we will be right back after this. We are looking again at that page after going through the sector into basic materials. This is a listing of gold stocks. And what I did want to do is just take a look at a couple of other names, not only as potential candidates, but we are going to notice that let's go ahead to look at gold, G-O-L-D. This is Barrick Gold Corp. And I am taking us back to an intraday, but let's go ahead. Actually, this is a daily price chart. So what I did want to point out to you again is this move. Of course, we talked about June and July being quite bullish, August again. So we are looking at a stock similar to others in this group that are a bit extended. You want to pay attention to that price action relative to this shorter term 10-day simple moving average, but I'm going to go back to that intraday with an eye toward being able to capture when these gold stocks could potentially fall out of favor. But we only have this really brief period, this respite at the end of this July. So again, it's that same phenomenon. As the RSI breaks down below that net neutral, the price breaks below these simple moving averages. This is more toward with an eye for the dynamics that you want to be on the watch out for when this potential uptrend does end. So that is taking a look at gold stocks. Let's go ahead back because there is another area within the markets that is holding up remarkably well. And this area I'm going to take us to is one that potentially, if the markets right themselves, if we see the broader markets again get into a period where we are back in a bullish near-term uptrend. We're looking at consumer discretionary. And from here, what I'm going to do is take us down to home building. And really, it's with an eye toward, we talked about interest rates. And interest rates, actually, let's go ahead and take just one quick second and take a look at that 10-year yield. That is a benchmark bellwether view of interest rates. And what we're going to do is look at a weekly chart from here, because what I want to point out to you is the fact that 10-year Treasury yields, take a look, we're down now at 1.66, and really we'd have to go back to this period here. This is taking us back to 2016, subsequent to the Trump election, and that's the last time that interest rates were at this low of a level. And of course, housing is very dependent, particularly this week we are going to get more numbers as far as home sales, new home sales, and existing home sales. So as interest rates decline, that makes it available certainly for more people to potentially purchase homes. So here we are in consumer discretionary. We are just going to take a quick look here at some of these home builders. So from consumer discretionary, I went to home construction. Again, we are going to want to sort this by that scooter, SC TR, Stock Charts Technical Rating. And up here in the forefront, we can see these are going to be your better performing stocks. And what I'm going to do now is go ahead and take a quick look at DHI, because again, for my work, I do tend to like these larger cap, more liquid stocks, better known names, less volatile. So we're going to take a look at DHI as a potential candidate. Let's just take a look at where this particular stock is currently. And we can see it's been really rather volatile, certainly from this May to August period. This is a daily price chart, but more recently, the stock is finding support at this upward trending 10-day simple moving average. I'm going to go ahead and annotate this quite quickly so you can get a better sense of what I am seeing here. And from my work, I like to look at stocks that are breaking out of basis. So we can see that DHI, looking again at this daily price chart, this stock broke out of this 2-month base last week on significant volume. So that is quite constructive. In other words, it broke out to a new high. Your RSI is positive, as is your MACD. And then even given today's downtrend, or certainly negative action in the markets, the stock is really just pulling back to this upward trending 10-day simple moving average. So that's one example, certainly, of a stock among these builders that is holding in quite well. Let's go ahead and take a look at one other name among here. So again, we are going to sort this by that SCTR, and we can take a look at certainly some of these other stocks. MTH is Meritage, MHO. So we can see the nice uptrending move that some of these stocks have had. NVR is another well-known stock among this group, NVR Inc. And this is another one that last week had a false breakout. It did not hit a new high, but should we go ahead and hit a new high this week, certainly that would qualify as a nice breakout and potential uptrend. So that's an area that I did want to point you toward, but I also wanted to point out the fact that when you see certainly interest rates, housing stocks acting quite constructively, there are other areas among the markets that are also going to be in tandem with the move into housing. I'm just going to go ahead and pull up some ticker symbols to give you a sense of that. So this first name, the ticker symbol is BLDR. This is Builders First Source. And let's go ahead and do this, because you can see really how quite strong this stock has been. And what we can do from here is request what's called a full quote. That's going to provide us with even more detailed information about the stock. And we can see that this particular stock, the industry group that it's in, it's building materials stock. So this is a stock, we're looking at a daily price chart. It broke out of this 3-month base last week on very big volume. Take a look at that volume. We can see this MACD is trending positively, RSI positive. Also up here now, currently, it is showing as being a bit overbought, so a bit extended, but more to the point, take a look at this action. The broader markets last Monday dropped 3.6%. They were down over 1.5% for the week. You really wouldn't know it to look at this stock. So when you see an industry group that is doing well, you will see other add-on industries that are also doing well because of the strength. There is a need for these building materials. Let's take a look at another stock, BLD, in the very same group. Not quite as dynamic, but again, take a look at how it withstood last week's weakness in the markets. We can see that it broke out of this 3-month base. Take a look at that volume bar down here. This is all about earnings. These companies are coming in with strong earnings. One last name, BMCH. This is a little bit of a smaller stock, but same dynamics, breaking out of this 3-month base, big volume, all about the earnings. This is a distributor of wood products. So an add-on to those home builders is, again, with an eye toward this strength. It is currently a bit extended above this 10-day simple moving average, so it is a bit overbought. So that is one phenomenon that I wanted to point out to you, and certainly an area of the markets to take a look at when the downward pressures in the broader markets subside. Let's take a look. We have time to review a couple of these names that are due to report. I'm just going to highlight really, again, those that are a bit more relevant given the current market action. First, I'm going to show us the semiconductor index. This is a part of the market that is really getting negatively impacted by these tariff fears. And a lot of these semiconductor stocks do provide services to China, so they do stand to be negatively impacted. Their Applied Material is going to be reporting this Thursday. You can see that it is downward trending in line with the semiconductors. It is one to pay attention to. It's a bellwether stock, so depending on how they report, we could see it impact other semiconductor stocks. Let's take a look at another area that has been really quite hot. Or certainly not hot as far as doing well, but a hot button for many investors, and that's cannabis stocks. There are a couple of names that are going to be reporting this week. This is Tilray. The stock had a big upward trending move back here last fall. More recently, it's really been rather dead in the water. It's been a bit of a go nowhere environment. CRON is the number 3 Canadian cannabis stock. They reported last week. The markets were not impressed with the numbers. It's still very valuation quite high relative to the current price. CGC is another one that is going to be reporting this week, and I'm just pointing that out as a way to stay on top of these cannabis stocks. Should they come in with good numbers, CGC certainly is priced to potentially pop. This is their earnings report last April. You can see it was in a downtrend then going into earnings, and it was able to enjoy a nice pop. One other stock that we can take a look at that is reporting this week is a bit of a bellwether name. This is Walmart, but we can see Walmart had a very, very positive period here, June into July. More recently, it is deteriorating. This is in line. I talked about consumer discretionary. A lot of these retailers stand to lose from this September round of tariffs. So we can see that green line down through the red. That was that death cross that we reviewed earlier, where this positive momentum is shifting. Stocks price now down below this 50, so not in good standing. And one other name that is due to report this week that is certainly worth noting, this is a very large Cisco, a large technology stock. They really had a very good period going into May, all about 5G, but more recently it has fallen out of bed. Again, another name that's below that 50-day, but we will keep an eye on it because it could play into other areas among technology. One other bellwether semiconductor stock that is due to report is NVIDIA, another one that is not doing well. This is in line with the other semis, but we will, of course, want to keep an eye on how this particular stock performs going into for other semiconductor stocks, and I am going to leave it at that. For those of you in the San Francisco area, I will be at the San Francisco Money Show. I have presentations on Thursday, Friday, and Saturday, so please stop by. There's also an ability for you to attend virtually. You can go to MEMinvestmentresearch.com. Go ahead, contact me at the support area, and I'll give you that link so you can virtually attend the San Francisco Money Show. And I'm going to go ahead and leave it at that. For those of you trading this week, happy trading.